Hello, everyone. My name is Kujosi, the admin of CJ Forex. Today, I want to make a valid analysis on a particular asset class. Many people have been making series of loss in their trading, especially those who trade synthetic. Many of you who have been in synthetic have been in this business for a very long time, but you have not made a valid profit. Instead, you are dashing the money to the Forex market. Now, before I go on, let me talk about our training institution and how you can better yourself when you enroll into our academy. As a trader who have been experiencing series of loss, it's high time you tell yourself the truth by saying, I don't know this business. I think I need a capable hand that will train me. I don't know this business. I need someone that will guide me, mentor me, and I become perfect. All the money you have been losing in this business, if that you have used it to pay for your training, you wouldn't have lost all those money. Knowledge is power. Every field in this world have a way it is being done. Before you go into any profession or any skill, you need to know how that skill works before you start making money with it. And obviously, Forex is the only field in the world or profession in the world where you can still earn while you are learning. And how do you mean learn while you are learning? There are so many scientists and professionals who have been working hard to make things very easy for me and you. These people make sure that they provide indicators like robots, like indicators that give alerts, helping us and also providing signals for us to make things easier for us to be earning while we are learning. Now, in this tip of my training, I'm going to discuss on how you can make a valid analysis. If you wish to continue, you can call me or contact me to get our account management. On our account management, you can submit your account and pay your membership subscription fee. Then we at CJ Forex, our managers will be managing your account on synthetic and making good profit every day for you. Okay, now first thing I'm going to do now is that I want to help you to understand how this volatility market works. Many of us know that this market is very volatile. Okay, and this strategy I'm going to be explaining, you can use it on boom, you can use it on crash, you can use it on any asset class, including crude, currency, other asset class in the forex market. But because today is Saturday, I'm using volatility, or I would have used other asset class, but let me use volatility because that's where I am acquainted with. First thing, I want to go into the market for the day. Maybe today is Saturday, and I want to look at the market and see what the market is going to tell me. I will go to daily time frame. I will check the daily time frame. This is naked forex. Okay. First thing, you need to know where the market is going. Second, you need to know where to enter. Okay, many people like entering when the market is running. Advice for you: don't jump into a running market. You wait for the market to come and pick you. Many of you want to make money immediately because you saw that the market is rising. What if that place you place your trade, the market start pulling back or turning against you? So that's why it's good for you to go for knowledge. You know when to enter, how to enter, where to enter, and we have to put your stop loss. These are very, very vital things a trader needs to understand. Now, this is a valid market. This is a daily time frame on volatility 75 daily time frame. You can see clearly that this market has been going up all this while. Let me clear this arrows that I'm seeing and make it clear. Okay, so this is a valid up this market now. If you look clearly, the market has been coming down all this while. If I have a look at what I mean from here, the top, this is the highest top that the market formed. Okay, let me change it to white color so that it will be clear. Okay, this is a valid downtrend. How do I know that this is a downtrend? A valid downtrend have to form what we call higher highs, and a valid uptrend is formed when there is higher highs and higher lows, while a valid downtrend is formed when there is lower highs and lower lows. Okay, now if you look clearly, if you want to enter a valid market, you first of all zoom out. You zoom out first. Maybe you are confused. You want to know where this market is heading. You can see that the uptrend started from here down to this place. Okay, now let me draw a line. You need to know all these things. From here, this is the most significant low. From here, I take it to this place. Okay, this is the most significant high. From here, I drag it from significant high within this range to this most significant low. You see, the market is progressively going up until it got to a particular point where there was a failed rule of uptrend. And what do you call a failed rule? When there is a failed top or a failed bottom. Now, on a uptrend, you are expecting for an uptrend to fail when there is a failed top. And you know, every top is higher than the previous one. But when the current top fails to go higher than the previous, when the recent top fails to go higher than the previous top, it means that the trend for uptrend has ended. Okay, so let's look at this now. This is a valid. You can see market is progressively going, pulling back. This is called impulsive leg. This is the main trend. This is a corrective leg. So right now, the market, as I'm drawing, the market is in an uptrend until I come across a failed top. Now look at the market is still going up. This is a daily time frame. This is an uptrend, and suddenly there was a pullback. Yes, which also happened all these places. But this pullback created a top, which is this top. Now this top here failed to be higher than the previous top. So as it has failed to be higher than the previous top, what do you say? It is now a failed top. But we cannot establish that it is a downtrend until when the trend break this level. If it break this level, it is now a downtrend. So this is the level. Let me use this one. Okay, if the market break this level, you see, it become a downtrend, and it has broken it. Are you seeing it now? The market has broken that level. So let's say this downtrend started from when the market broke that level. You know, when it broke the level, first thing, it broke it and give us 61.8 Fibonacci. For those of you who are acquainted, so look at it now. This is a daily time frame. Daily time frame helps you to see a longer view, what the market look like. Okay, now the market has come down and pulled down to this level. You see, then I'll make a pullback, which is called, this is leg. Now it's downtrend I've established. Okay, when there is higher highs and higher lows, it's an uptrend. When there is lower highs and lower lows, it's a downtrend. So what do you say? This is lower highs, this is lower high, this high is lower than this one, and when there is lower low, so this is the lower low here, and the price has broken that lower low, so a downtrend has been established. So now what you'll be looking at is that now you have established that this market is a downtrend in a longer time frame. You now start looking at what the shorter time frame, because since the market is in a long side, is a selling direction. What do? That is why most people, if you try to trade against the trend, you find out that some people will try to buy. Yes, if you buy, you find out that the market will turn against you, because if you don't buy against the trend, you don't trade against the trend. Most people will be buying now. Some people are buying now. Meanwhile, the market is a sell. If you look at the candlestick that is forming selling, you see how the body of those candles are very strong, because the market is in a selling direction. So look at now, I've already done this daily analysis, explaining that you can see clearly. I don't know what's wrong with this system. You can see clearly now the market have done what? Have fell down to this level. So what happened now? It now pulled back again. Are you seeing that? It has pulled back again. This is a pullback. Okay. So most people think that this pullback is a, hey, market have started buying. No, it's just a pullback. You can as well trade it. There are strategies that you need to know. That's why I said enroll into our online academy, where you will learn how to see this market as it is, and you will not be falling victim of losing your money. That money you will lose. Pay it and learn how to do this business for your own good. So now the next move is that as the market has pulled back, okay, what do you expect? The market will start going down again. Okay, now we have established in a higher time frame, which is the daily time frame, that the market is on a selling direction. So I will go back to one. Remember, in volatility, we focus on 5 minutes and 1 minute if you want to enter, because of the volatility of the market. So you focus on 5 minutes. Now, for you now, you have confirmed that this market is a complete downtrend. We are in a selling market. Don't mind what is happening. Why this market is struggling at this level is because of this resistance. This place is very strong level. You can see clearly, but it will still go down. That is how it's happened until it will break it. That's how it does. So now we'll check on 1 hour now and see what the 1 hour time frame is telling me. Okay, 1 hour is telling me that it's a downtrend. Okay, everything is confirming down, down, down. So now I've checked 30 minutes. 30 minutes is telling me what? Downtrend. I will now check 5 minutes. 5 minutes is telling me downtrend. Okay, as 5 minutes is telling me downtrend, what do? I will look for a good strategy that I can use. And this strategy I'm going to show you is just a simple strategy, but you need to know it better. Enroll into CJ Forex, but you can still use this guidance for all the asset class until you are ready to enroll into our academy, or you subscribe and get our investment package, where our managers will be managing your account and you'll be making money. So the next thing is this. Now I'm going to insert an indicator, a strategy for myself. I create this strategy. Where is indicator on there? Where is my indicator here? I think if I don't see the indicator, I'll just go to template and insert it. I don't know. Okay, let me pick it from template. So on the template, I have so many strategies here. So this one is, I'm going to use this strategy. This strategy is called Catpilar strategy. Okay, Catpilar strategy helps me to enter this market vividly. Now, I know very well that this market is a downtrend. Whatever that is happening here is just to convince you that the market is about to change. No. Now, how do you know that a market is not like this buy now, that people are thinking that this buy? The reason why this candle, look at the buying candles. You can see the body of the buying candle. They are very, very small. Are you with me? They are very, very small. But look at the body of the selling candle, very thick. All of them tick, 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 tick. Because the original trend is a selling trend. But if you see the body of the buying candle, they are very, very, very small. Even here, you can see it. That's telling you that the candle itself, the buyers are not strong here. Then if you look at the stochastic, you see the stochastic have already reached overbought level. Another thing you should use to confirm, look at the stochastic. It has reached overbought level. If for those of you who knows how to use stochastic. So since stochastic have reached overbought level, Now, if truly you want to enter for buy, what you would have done is that you first of all look at this candle. This moving average is called moving average 20 applied to close exponential. We use this moving average to enter our trade. Now, the rules on this moving average with this Catpilar strategy is that when you want to enter for a buy, assuming you want to enter, you should enter with pending order, not instant execution, so that it will give you time to calculate. And the rule says that after every 5 candles that cross below or above moving average 20, then you should consider setting the fail top or fail bottom as your entry point. Now, the rule says that if I have a fail bottom, which is this one, this is a fail bottom here. Fail bottom means that, you know, the rule says that if a valid downtrend, you must have lower highs and lower lows. You can see this low, this particular low is higher than this low, and which has broken the law. Assuming this low, because every recent low in a downtrend must be lower than the previous low. Look at it. This one is lower than this. This one is lower than this, so on and so on. But it comes for this one. This one did not go lower. It said this one goes higher. Now, how many candles that form before it formed this trend? The rule says that it should be at least 5 candles. So now here, since it's a downtrend, what you should consider, if it's not up to 5 candles, you will not enter this firm, you will not set this trade. Let's see from here, 1, 2, 3, 4, 5 is valid, right? Number 1 rules that the entry point is valid. Number 2 is that, is your MACD valid with it? You use your cross check. If you really want to enter, you say, okay, let me see if my MACD approve it. Yes, MACD approve it. So what do? You can set your entry points. Look at it. You can say, okay, since you want to buy, but everything is telling you that this market is still on a selling direction. Me, I will tell you that this market is a fake buy. If you are using pending order, there is no way market will pick you here, because the market originally is a downtrend, except the market wants to fail to start going up. But right now, we are looking at this now. Look at since you want to buy, if you want to buy, you set your entry point here and you set your stop loss here. Okay, this is the distance between here and here is your entry point and stop loss. That's why I encourage people to always use pending order. So as you set your entry point here, you set your stop loss. So you calculate how many pips. A good trader will calculate how many pips from the entry point to the stop loss. Well, how many pips is this? That is 868 pips. 868 pips. That is the distance between your entry point and your stop loss. You can then use Fibonacci to target. Okay, I'm going to use 61.8 here. Is 61.8 the same valid? Okay, you look at it. So your first TP, even if this market is not a valid uptrend and the market eventually trigger you here, there is no how this market will not reach 61.8. So even if you are setting your buying pending order, okay, buy pending order, your TP1 should be here. Okay, the same thing now. If you are about to buy, you should look at this now. But on a selling direction, the same move you will make. Look at here. And just look at here. I'm trying to show you something. Now, I want to start where the market start going down. Okay, on this place again, if you look clearly, the market failed here, made a fail bottom, a fail top here, okay? But this entry point was not below here, so this is a fake entry. I don't encourage here because this entry is supposed to be below. Now, it now went down to this level, okay? How many candles that make up this one? 1, 2, 3, 4, five candles. So you set your entry point here. Then where will be your stop loss? You set your stop loss here. If the market eventually trigger, it will go your way. The same thing with this one now. You can see I gave you a scenario with a buying order. So if the market eventually the market did not trigger you, as far as the market did not trigger you, this level here. Look at here. This is your entry point, and this is your stop loss. Okay. This is you want to buy. Let's say you want to buy. You pick your entry. Since you have seen the valid, everything have meet up. Number one, the entry point is above moving average 20, which is valid. And number two, the pullback has already formed 5 candle. 5 candle, yes, from the entry point to here has formed 5 candle. It's confirmed. So your stop loss should be here. Your entry point should be here. Your stop loss should be here. Then if the market eventually, what all this thing is doing now, if it eventually break down this stop loss without triggering you, delete that pending order. But if it triggers you, your TP should be your Fibonacci 61.8. At least target 1:1, which is 61.8. Okay, so your first TP is here. Look at your first TP here. Your first TP, your first TP, if the market eventually triggers you, your first TP should be 61.8 first. Okay, are you seeing that? Okay, or if you cannot and you want to make 1:1, you can directly measure the level from this distance to this distance. 1:1, you can use 1:1. Since Fibonacci did not give you 1:1, and it's not making sense. 1:1 means I am risking 1 to make 1. Okay, so from here to here is how many pips? Okay, that is 888 pips. Then you now measure again. You must get that same value as your TP. How many pips? I'm looking for that same pips. See it here. You see, this is the place. I've seen the place. So I move my TP to this level. Okay, are seeing it? 1:1. I measure it and I leave it. As far as the market come and trigger, if the market triggers you, you are good to go. You will take profit. But if the market did not trigger you and all this thing is doing and break here, you know that this buy is a fake buy. That is why if you enroll into the CJ Academy, you learn how to enter the market and how to discover a fake entry. A fake entry means that sometimes you might be seeing that this is a buy, but it's not a valid buy. It's just a trap to trick you in and then cut your money. That's why I said, don't just be jumping in and start buying and start selling. This business is a skill. If you don't learn it, you will not become who you are. You can also subscribe into our VPS where you'll be copying signal. That one is affordable. Wherever you are, just find way and be part of our academy. This strategy, you can use it on any asset class, including boom, crash. Once you have done your analysis correctly and you are able to set it, you will now see that Forex will become very easy for you. You will not be losing your trade. You will not be crying. And even if you are losing, you know how much you are expected to lose. That's why once you enroll into the academy, you will learn how to calculate your risk. You will learn how to analyze the market. And so many, this one is one of the strategies. We have more than 10,000 strategies that you can use. So if you don't see opportunity with this one, you will see opportunity with the other one. Okay. My next thing remains with Josie, the admin of CJ Forex. Find your way and be part of our service if you want to save your money. Thank you.